The government is popping champagne over a 2.1% growth in the economy. But why does it feel like your bank account is still losing the war? Jim Chalmers is telling us Australia is a global leader in recovery. But once you look past the headlines, the math tells a much darker story. Are we actually richer? Or is our growth just a side effect of you paying more for survival? Today, we are exposing the gap between the news and your wallet. G'day, I'm Calinda, and you're watching CalindaReports. On paper, Australia is growing at its fastest rate in 2 years. But for the average household, it feels like a total grind. Today, we are unpacking what that 2.1% growth actually represents, and why it might actually mean interest rate hikes are back on the table for 2026.1. The growth engines, AI versus your grocery bill. Where is this growth coming from? 2 places: big business and your essentials. We are seeing a massive boom in New South Wales and Victoria data centers to feed the AI craze. That's great for tech billionaires, but for you? Most household spending growth didn't go to holidays. It went to record high rents, insurance, and power bills. Technically, you're spending more, but you're getting less. 2. The slice of pie problem, per capita GDP. Here's the part they skip. While the total economy is bigger, our population is growing so fast that the average slice of the pie is actually flatlining. GDP per person only grew by a tiny 0.4%. You aren't feeling a boom because, individually, we aren't moving forward. 3. Real wages versus 2011. Your buying power is literally stuck in 2011. Last quarter, wages grew 0.8%, but inflation hit 1.3%. You're working harder just to buy what you could afford over a decade ago. Question for you: does it feel like your paycheck is keeping up with your bills? Or are you effectively earning 2011 money in a 2026 world? Let's talk about it in the comments. 4. The property forecast and RBA risk. The RBA is worried we are hitting our speed limit. If inflation stays sticky at 3.8%, rate cuts are dead. In fact, markets are now pricing in a potential rate hike for 2026. However, for property owners, there's a silver lining. Very low unemployment and high migration mean that even in a grind economy, SQM Research is predicting up to 10% house price growth next year. The headline looks great, but the reality is a struggle. If you want to cut through the government spin and invest like the top 1%, you need to be a property insider. Hit that subscribe button for your daily 90-second update so you never miss a beat. For more on the SQM 10% growth report, watch this video here. Thanks for watching CalindaReports.